if you're investing, you need to understand the numbers. They're going to hand you, their paperwork, their wonderful, beautiful webinar and all of that. If you don't really know what the numbers mean, you could fail yourself. So get educated.
Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
All right, welcome back to the Gentle Art of Crushing It podcast, Passive Investing Edition. My name's Randy Smith, and I'll be your host today. And I am really, really excited to have a very fun guest, Julianne Peterson, on with us today. Julianne Peterson is the Senior Director at Old Capital. She is the host of the Zoom at 8, which is a weekly live networking event, all based around this multifamily stuff. And then she's also a coach for Michael Blanc in the Multifamily Academy. So, Julianne, welcome so much to the show. I'm really excited to have you here.
Well, thank you so much. I love the name of this program, Crushing It. I love it. The Gentle Art of Crushing It is great. Yeah.
Awesome. Well, why don't we just have you jump in? Can you tell us a little bit about yourself and how you found yourself in this amazing multifamily space?
Sure, absolutely. A dream come true, actually. When I was about 14, I said to myself, I am not going to pay someone else to live and pay someone else to live in their place. So about 18, I left and I moved to Los Angeles and started really look into real estate. And quite frankly, I mean, if you're going to buy something in Los Angeles, it's going to be pretty expensive. So I bought my first property actually in Los Angeles, $250,000. I was 22 years old. And you know what? Keep in mind, real estate is always not, you don't always crush it. There's ups and downs in everything that you do in real estate. So that first one, I lost 80,000 because the riots came. The LA riots came, and I was in the business of bicycle sales. I used to sell bikes across Los Angeles for a manufacturer, and the riots came, and quite a few of my top bike shops ended up closing down. They got looted and just had to shut down. So I ended up getting a job up in the Bay Area, and I called up a friend and I said, hey, I need to sell my house. And you love my house. And he said, well, all I have is $4,000. So I said, okay, I'll take it. And he made the payment, but I had a second on that house because when you're a first time buyer, a lot of this stuff you can't qualify. So I got a second. And I ended up paying that off, but I didn't have a house. I just had to pay her. But it went to another property up in the Bay Area, doubled our money. Went to Chicago, bought larger assets. Came to and I was managing them, learning a ton. Moved to Colorado, kept managing our own properties. Came to California, bought more properties, but what kept happening is I kept trying to buy more and more assets, go from a 4 to an 8 to a 10 to I can't remember, but we ended at a 20 unit building and the lenders were like, go away. You don't have what it takes. And I said, what? I mean, who treats their people like this? So I said, I'm going to get into this because I had done so many loans and I had used and abused a lot of my single family brokers. I can get a 0.25% better. I can get an 1/8%, a 16th, 32nd. I was terrible to these people.
Your nightmare client today, right?
Exactly.
Yeah.
Exactly. So I said, after I figure this out and get my partners, I'm going into to providing debt. And that's what I did. I came to Old Capital about 11 years ago. I have 4 kids and my husband was doing a lot of traveling and said, you know what, we're just not ready. We're not ready to be having you travel. So I said, I'll be back. So about 8 years ago, I came back, and it's been a great, great place to work, because I call my desk the control tower, because I get deals in. I'm looking at them from a debt perspective. I'm looking at them from a general partnership perspective. I'm looking at them from a capital raising standpoint. So I've got my hands in a lot of things. Most lenders have never done this. They provide the debt. They come out of college. They provide the debt, but they are not involved in it. Now that's not, that's a general statement, but I have done so much involvement in multifamily that I feel like I can speak on so many different levels and can bring a lot of knowledge to a lot of different types of people, whether you're a capital raiser, whether you're a general partner, you're an investor. I'm an investor. So yeah, that's really what I bring to the table.
This is Chad Ackerman, founder of Left Field Investors, and I'm inviting you to listen to our podcast, The LFI Spotlight. Tired of the Wall Street roller coaster? Discover how to invest in real assets as I interview syndicators, seasoned passive investors, and other experts every week. We'll help you learn about cash flowing syndications, bringing you closer to financial freedom. Visit leftfieldinvestors.com to listen to the podcast, subscribe to our newsletter, and connect with like-minded passive investors. Join us today.
Thank you for walking through that too, and it's interesting to hear your experience going from 2 to 4 to 8 to 10 to get out of the business to coming back kind of with a vengeance, like I'm going to show you, right?
Exactly.
And then I think you said you guys did like 1.2 billion a year, so you do okay in the business, I'm guessing, right?
Yeah, so Old Capital, we've been around for 38 years, and we typically a good year is 1.2 billion or so. There's only 8 of us. We started out in Texas, and we've worked with a lot of education programs. And that's how I got involved with Michael Blanc's. And we really want to have a relationship with our buyers, with our borrowers. Um, there's a lot of lenders out there that are transactional, and we really shy away from that. And when you're thinking about buying one of these assets, or you're investing in one of these assets, all of the people that are involved in putting this asset together are looking to partner with your lender, because the lender is your biggest partner. We're bringing the largest amount of capital to the stack. And so these general partners, they want to build relationships, because as a mortgage broker, again, we have relationships with apartment owners. We have relationships with brokers. So we can bring a lot of value to the transaction. As I mentioned, I capital raise and all this other stuff, but that's really an important piece of getting these deals done, because when you have a relationship, you can go real far with these.
Thank you for sharing that as well. And I think that a lot of times you hear the mortgage broker or the lender kind of being discussed as almost the bad guy, because they're not allowing you to do XYZ, or they're requiring XYZ. And coming from a banking background myself, like, the best relationships are when you actually really truly partner with your lending or your financing organizations, because when you come together and kind of open up the curtains, it's going to give the banker or the lender or the mortgage broker the opportunity to really understand what you're doing. And you're going to get to learn so much from all of their years of experience. I mean, you've been in this space for a lot of years, and I'm sure you're dealing with a lot of folks that just went to some mentorship weekend program and think they're a multifamily investor all of a sudden. So that's such a good point.
I would tell you, because these brokers, or these mortgage brokers said, go away, just go away. And I said to myself, I'm never going to do that to one of my clients. So I spend a lot of time up front explaining to my clients, how do you do financing? What does that look like? What is the business plan? How do we structure this? I really want people to get a good understanding, Because what you'll find in this community is, hey, we need to get on and off the phone, but I'm in this to have your first loan all the way up to your 10th loan. I really want to work in parallel with my clients so that they understand, hey, this is not transactional. This is a long-term relationship. And without that knowledge, without the understanding, without the explanation, I find a lot of people are still kind of scratching their heads saying, I don't get what you do. So I want to kind of remove those barriers so people are comfortable knowing, hey, it's possible to get these deals done. And I would tell you this, and it's really important as an investor in these deals, that a lot of people are looking for opportunities. They're looking for deals. They're underwriting these deals. But you have to have somebody on your team that has experience. Keep that in mind because you want to know who is behind this deal. Um, Maybe one person found it and they don't have a lot of experience, but they're partnering with somebody who's bringing net worth, liquidity, experience. And that is the key to investing in these deals is who is behind this? What's their track record? Be really cognizant of that. Ask those questions.
Yeah, and I think that brings up a really good point where, in years past, in the last 3 to 4 years or so, there was a lot of different things that were going on. I think there were
Hmm.
probably, um, brokers out there and lenders that might have been doing business with folks they shouldn't have been doing business with, or potentially presenting lending products or tools that might not should have been presented to those specific operators. So I'm curious, what's kind of your take on what's happened over the last few years and where we're at today, and
Yeah.
what we might expect to see in the coming years.
Well, I like to pull it back to right before COVID. I mean, everything was going along just swimmingly. I mean, multifamily was the darling and still is in many ways, but really truly right before COVID, we kept there's always a threat. Oh, are the rates going to go up? When is that going to happen? And it's only this year and it's going to go down next year and then COVID hit. And this community found a lot of people sitting at their desk, talking to their friends. They've got a bunch of money coming into their bank account. They're learning online. Oh, I hear about this multifamily thing, and all my friends have a bunch of money. Let's pool our money in a syndication and let's start taking these deals down. And at that time, we were running into an interest rate that was 0.01, 0.02, 0.05%. I mean, it was nothing. And so a lot of these people could get into these deals and bring in 25, maybe even 18%. So you didn't need to be capital raising a bunch of money because you could call up a couple high net worth of friends of yours and you could now be in a deal. And these people were taking down deals in the very early years, I guess is what you could say, months, with bridge financing. This was adjustable rate bridge. They were 2 to 3 years to get into them, interest only loans. So you've got all of this rent money coming in and you're renovating and you're only paying a little bit of money on that interest as interest only. So again, in the early months, this was a great vehicle. People were taking, 10 months, 12 months, renovating it and getting out. And they were making bucket loads of money, bucket loads. And they go to the next one, more money. And so a lot of people got on the train, say, I can do this. And last March 2022, the interest rates started to climb and kept climbing and climbing. And here we are today, 5.25. And we're waiting to find out, are we done? Okay. I know this is probably a timed podcast, but listen, these people that got in early on, it worked. But a year ago, a lot of struggles. We did not anticipate the inflation. We didn't anticipate, the employment, the cost, payroll, People used to be paid, what, 40,000. Now they want to be paid 80,000 and they're getting it. So this payroll line item is no longer $500 a unit. We're up to 1,800 and 2,500 a unit. It's crazy. So where does that leave us today in this market? We've got some things happening. We just saw 5 deals out of Houston. We had 4 foreclosures. Why? Why did this happen? And it's a lot of it came because this group got into it, had big dreams, and like all of us, got into it low interest rate, but he didn't put a rate cap on it. And this is an insurance policy. So, and not to go too deep into it, but rate caps a year ago, 2 years ago, were something that were fairly inexpensive. Up until a year ago, they exploded a year ago. So potentially, to get a rate cap on a $100 million deal is $2-3 million. And if you're not very good at capital raising and you have to bring in, let's say 18 to 25%, and now the bank says, put some more, $2-3 million rate caps, that's a lot of money. I'm done raising. And so that is what we saw. We've got a guy who didn't put interest rate cap on it, didn't put, their property manager left, run out of business or just stopped working, and very large assets that maybe he probably didn't have the right amount of knowledge to run those big ones. And you've got investors who invested with the hope of doubling their money, tripling their money, because that's what was happening. So a lot of people put these bridge loans on and can be successful, but what we're finding is taking a loan that with the spread was 275 is now 10. You just cannot understand where's that cash flow going. And you've got a lot of investors saying, when am I going to get my distribution? You told me. We're seeing capital calls right now. And we, obviously after the loan at a bridge loan at 3 years, you have to have a plan. What am I going to do with this? Should I add another year? We can add another year to those loans, but I need you to go buy another rate cap. That could be another 3 million. You don't have it. So we're looking at, can we get into different financing? And in a lot of these cases, this capital call, it's a cash in refinance if it's available. And there's just not enough capital coming in these deals. So very, very challenging times coming up.
Yeah, so gosh, that is a mouthful. So you talked a little bit about the trend of maybe people that shouldn't have been in the business were jumping in the business because everybody was making a ton of money on it. We see interest rates go up. All of a sudden, property managers are jumping ship, and just business plans are dissolving in front of these
Yeah.
folks. So there's a lot of talk that's going on around these bridge loans that are coming due. I've heard some discussions around alternative financing or other lending options that they might be leveraging. What's your take on that? How do you see that playing into the next year or 2 or 3?
When I got into this, I said, we've got a lot of creative financing in single family. I don't do single family anymore, but a lot of creative. So a lot of these people shift from single family to multifamily. And they're like, oh, this is great. There's a lot of flexibility. And I remember having a conversation with Paul, and he's like, there's not a lot of creativity going on in multifamily. So, you're going to take your bridge loan. You may have to get into another bridge loan if you can find a company that's going to buy into that idea. You might be able to get into a HUD loan, which 35-year AM. There's some, they take a long time. HUD loans take up to a year, so maybe you don't have that timing. Maybe you're going to have to get some pref equity, which is then going to cause your investors to make less money because they're going to be the third in the stack.
Can you talk about the pref equity piece a little bit? Because
Sure.
that's something I hear thrown around quite a bit right now.
Yeah, and people say, "Oh, it's really easy. It's not a problem." But I have to disagree. You have to make sure that the lender is going to allow you to put pref equity in. You also might think about, this pref equity is going to say, "Hey, I need uh, to be paid a certain amount now, and then it accrues, and then you can pay me the rest of it." And right now we're seeing high interest rates on these, and they may not want to just have $2 million that's going to close this gap. They may want to have more of it, and it's putting what you need to know about it is that it's putting the investors at risk. However, it's keeping instead of defaulting, right? The question is, how do I keep my money moving and not lose it? And that may be your only option.
So that's kind of a last ditch case to save a deal before it potentially defaults.
We're doing all of this, right? All in
Okay.
parallel.
Okay.
I think your capital calls are, depending on the way that the PPM is written, the docs are written. There's a mandatory capital call where you have to put money in. It's not an option. And if you don't put on a capital call, don't put money in. Now you're going to be diluted. Um, we're trying to come up with every solution possible to get people to be thinking about, okay, if you're a year out from refinancing this, if we can look at your NOI, your net operating income over the next 12 months, and we put targets on a regular basis every month, you have to hit this number every month to get to that 70 or 75%, maybe even 65 on agency. That's what we're doing. We're starting a year back, a year and a half back to get people on a plan so that we can successfully get into other financing or how you can sell this at a reasonable price.
As a lender or as a broker, are you working with your folks that had these old loans to do this, or do
Oh yeah.
other brokers come in and say, work with us, we're going to try to help you get to some solutions? So
Yeah, we do both, right? I mean, you can do a search on any of the CoStar, Yardi Matrix, and we're starting to look at even people that have bank loans. But we're targeting people that have a maturity date so we can identify a bridge loan and a maturity date, and we're targeting them and saying, hey, have you thought about getting, let us look at your T12, your rent roll, and giving you some idea of where you need to go. A lot of, what we're seeing and hearing is nobody wants to talk about it. Nobody wants to say, I am in a bad place here, because we're all whispering, but everybody knows something's, having a hard time here. So we want to be we want to be respectful to it, but we also want to help you get an anchor so that you can, get some real quality information to set you on the right path.
got it. Okay.
Yeah.
Very good. So yeah, we kind of got into the weeds. So for the new listener that's listening, I apologize we get into this, but this is important stuff, especially if you're an investor that is sitting on some of these deals where you're a little concerned that maybe my dollars aren't coming back to me as they were promised a year or 2 or 5 years ago. So thank you. Yeah, that's really, really good details to know.
Well, let's unpack that for just a minute. So if you're currently in an asset right now that you don't know much about it, right? We get in, we put our money in, we're all excited. And maybe you didn't find out what kind of lending it is. Always before you do that, from here on out, ask the owner, whoever you're investing with, what kind of loan do we have on this, or are we going to have? The other thing is to think about is what is the leverage? Because the higher the leverage, it's going to be a little bit more risky. Is there a CapEx budget? What does that look like? The lower the leverage, the more safe you are. If you're putting on, you're doing a value add, understanding that you're probably not going to see any returns if it's a heavy value add for 18 months. So where are you in that cycle? And during that cycle, asking questions. How does this look? How do we, and then the question is, if we're at 2 years, what's going to happen on this third year? Do I have to go buy another rate cap? Do we have a 3-year rate cap? Do I have a 2-year rate cap? Because all of these questions, if you haven't asked them or weren't told them in the past, it's going to give you a little bit more knowledge for understanding where you are with this deal as well as for the future. Very, very important.
Okay. No, that's really good. Thank you for going through that. I'm curious also, you mentioned CapEx budgets, and I know there's a lot of operators out there right now that their business model very clearly was value add throughout the process. They don't get those dollars up front. So essentially they have to prove to the lender that they're doing the renovations and it's creating NOI.
Mm-hmm.
What does that process look like? And are the operators, are they generally fairly confident that if they're doing the renovations and getting the dollars on the rent increases, that they're going to continue getting dollars? Or do the banks raise their hands sometime and say, no more on this? I'm just curious.
Well, I would tell you this. You go into these deals and you have a plan. You say, I'm going to be renovating one unit. We know that this unit, 105, we know when the lease is going to be coming due. Mrs. Smith is going to be moving out, and her unit needs $5,000. We're going to go to 106. We know it's going to cost $13,000 because we walked that unit, and we know this is what it's going to cost. So you
And
put
this is all on the front end? This is
all
all
on the front end.
Got it.
Yes.
Okay.
And you're going to put that all in a spreadsheet as an operator, and you're going to come to me and you're going to say, okay, this is what our budget is. Then we say, okay, we're going to give you this money, but you have to do these renovations first. Now, what happens if Mrs. Smith at 105 doesn't move out? You have slated that you're going to fix her property up. Well, you're going to kind of maybe go to the next one, and you know that it's very similar. So it's an art when you are looking at these CapEx budgets. And you do need to have an operating budget or an operating account so you can do these renovations. You're going to mark each line item. You're going to then give it to your lender. Your lender could and many times will send out an inspector who's going to go through the list of items. You're going to check them off. Oh, wait a minute. I see that you put a refrigerator in that unit and you didn't tell me. Yeah, that property, that unit, we're not going to do anything, but I needed to take that money out of the CapEx budget and put it there. No. Because what a bridge lender wants to know is the money that he's given you is going to raise the rents. That is already an existing person who lives in that. That's not going to raise their rents. If they had moved out, you renovated, you put a new refrigerator in there, then that makes sense. So what's happened is we've seen some operators, and more so than not, that they're using this somewhat of a line of credit. And that's not what this is. You have a business plan. You say, I'm going to renovate these on an ongoing basis. You may even need to move people from unit. Okay, I need to renovate your unit. We're going to put you over here. Some say yes, some say no. Then you renovate their unit and they move back in. And you may say, hey, I have to raise the rents. They may say, no, I'm out. Or they may say, I love living here. I want to pay the extra 100. And you have that same client or resident that has stayed there for a long time. It's all about figuring out the budget, figuring out the plan, and executing that. So it's really, really important that your budget, your plan is also the property management company is you guys are working together, that plan and that construction all work together. You're all trying to raise rents, you're all trying to renovate them, but everybody's got to be on the same page.
Julie, I always learn so much when I'm talking to you. Like, it's a whole nother level that I don't even know exists until we start having the conversation. So it
Yeah.
proves to me time and time and time again how little I know about this business, and why I am a better passive investor than an active investor in this
Oh,
space.
yeah.
So yeah, very good. Well, gosh, as always, I've got like 8 more things I want to ask you, but this would be a 2-hour conversation. But
Yeah.
is there anything else that you would care to share with the audience? Again, remembering this is like newer passive investors, people that are just getting into the space, maybe people that are thinking about making their first, second, or third passive investment. Anything else you'd care to share with the audience?
Yeah, I would say 2 things. One is getting educated. If you're investing, you need to understand the numbers. They're going to hand you, their paperwork, their wonderful, beautiful PPM and all of their webinar and all of that good stuff. And it looks fine and all of that. But if you don't really know what the numbers mean, you could fail yourself. So get educated and also invest in somebody's deal. Okay. Invest in a person and a company that has a track record. So you're educated, you're investing in other educated people that have a track record. Really very, very important. And then the last thing I would say is as we're going into this next phase, which is it's no longer get rich quick. This is the long game. It's been the long game, but we had people doing a lot of funny, crazy business. You need to think about your money's going to be there for 5, 7, and maybe 10 years. So this is the long game. If you like the person that you're getting into business with, get to know them first before handing over the money. Get to know what their past experience is. Get to know what kind of lending they're using. I mean, your best lending option is agency, which is your Fannie and Freddie loans. These are long-term, really low interest from, as a whole from these are non-recourse. This is the shadizzle, if you will. This is the type of loan that you really want to have on these assets. So be thinking about that. Be thinking, ask those questions. Is this operator going to be using the very best lending options? And if not, how do we get there? And how long will that take?
Awesome. Awesome. And of course, are they using Julianne Peterson
There
as
you
a
go.
mortgage broker,
I
right?
love that. Yes,
Yeah.
absolutely.
Very good. All very good advice. We and actually I'll finish the call here in a moment with that pretty much that same advice. Get educated, but pick a deal and jump in and start to learn even more in that space. So
Yeah.
very, very good. Well, I have a few questions I like to ask everybody. So
Okay.
we're going to jump into those if that's okay. Is there a favorite book or a podcast that you would recommend to the new or newer passive investor?
Well, listen, I'm in my and I I want to make money, right? We all want to make money, but as we get older, is there going to be enough money to take care of me? And there's a great Peter Linneman who I just had on Zoom at 8, and Mike Royson. He is a doctor at the Cleveland Clinic, and they wrote a book alongside another Rasner, Dr. Rasner. They wrote a book called I wish I knew I was going to get asked this question, but it is called The Great Age Reboot. The Great Age Reboot. And it talks about us living longer and making sure that our assets today are going to take us into our 80s, 90s, and 100, even up to 129 is what they are speculating. So all these new people, get to know your health and wealth. It's a phenomenal book. Again, I had Peter Linneman, who's an economist from the Wharton School of Business, and he's retired from there, but he has a great sense of how to make money, how to run assets, and then you got the doctor who says, let's stay healthy and combine that. It is brilliant.
I love it. I love it. Yeah, thank you for sharing that.
Mhm.
And I actually was on your Zoom-A-Date with Linneman as well.
Oh,
And
yeah.
he is one of those guys, one of very few guys that you listen to, and you can't take notes fast enough.
Mm.
You feel like he's operating at an entirely different level. And actually, I'm going to plug one as well. Your Old Capital, the podcast from the Old Capital show
Yeah,
is fantastic,
it
and
really is.
it's another really good show where I go to listen for trends and market analysis and what's not the pretty fluffy stuff, but what's really going on in the marketplace.
Yeah.
And they always have really, really great guests on there as well. So, okay, good. So great book, great podcast. Can you share with the audience where they can find you or how they can help support what you're doing?
Oh, sure, absolutely. So I'm on all social medias, Julie Ann Peterson, ANNE Peterson. And then also everyone, investor or general partner, all of you are invited to come to my Tuesday weekly meetup. I don't, it's a live conversation, the Zoom at 8. And we've got some phenomenal people coming, speaking that are really critical to your learning. So come. It's you can find us at dancinginvestments.com. Dancinginvestments.com. You can sign up there. Don't forget the password. I'm not going to tell you what that is, but make sure when you receive the email to find the password.
I love it. I love it. And
Yeah,
for those of you that go to conferences, you just might see Julianne
I'm.
dancing a little bit as well up and down the
Yes.
hallways. So
Yeah.
hopefully you'll see her at one because she's just you can tell obviously really, really tons of information that she's going to share with you, but
Yeah.
just a lot of fun too. So,
Thank you. Yeah.
um, and then Julie, last question that I love to ask is, do you have a recent bucket list item or a upcoming bucket list item that you're hoping to check off your list?
Well, my life just got super simple. 4 kids, they're all going to be gone here in September. Our last one's going to college. So, I just got like my head's going to explode because the opportunities, the travel is going to be amazing. So, my son is a pilot, and so I get to fly. So we've got things like going to Banff. Really love to go to Banff. Just seeing great pictures of it. That would be one of the things on my bucket list I'd like to go to. Yeah,
Awesome. So empty nester and a
yeah,
free ticket to travel anywhere. What an amazing combination.
I know.
Yeah.
Fantastic.
Congratulations. All
Hmm.
right. Well, Julianne, thanks so much for being on the show. It was really a pleasure. We got into a lot of details that I had no idea or experience about. So thank you so much. You brought so much value to the audience. I really appreciate you.
You're welcome. Anytime.
Awesome. All right. And to the audience, as always, thank you again for joining today. As always, I like to encourage you to continue the education process, continue to get inspired around the space, but more importantly, take action and make a decision to invest in that first deal. We're convinced that once you do, you're going to be so happy that you did and wish you would have started sooner. So until next time, please join us again next Thursday where we'll have another fantastic guest and just make it a great week. Thank you.
Well, there you have it, ladies and gentlemen. Another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.